gold is a perfect anti-correlated asset class to stocks. Stocks are going to be suffering this year. I think we have a very good year for gold. I think we have a chance for an all-time high for gold even this year. And so I am very bullish on gold, extremely bullish on gold, actually. I can tell you I have not been this bullish on gold since September 2018, when gold dropped to below 1,200 and I made my last purchase of gold ounces. So I'm extremely bullish for this year, and I can talk more about like rate hikes and stuff like that, but I think the scenario here is very clear. Gold's path is very clear. Tech's path is unclear. It's really easy to see how Wall Street funds will hedge, and you're already seeing this decoupling. The NASDAQ is wobbling around and going down in the first 11 trading days here. Gold is actually going up.
Everybody, this is Rob Kientz of goldsilverpros.com. It is January 13th, 2022, the date that we're recording this, and I have a returning guest to the program is Lior Gantz, who's the editor of Wealth Research Group. Lior, how are you doing today?
Hey, Robert, doing well.
Good to have you back on. It's been some time, and I think some of the big news that we've seen in the last few months has to do with the Fed, of course. The Fed is sort of central to monetary policy, not only in the US, but around the world, and the Fed policy affects everything, interest rates and markets. You were watching, I think, Powell's, I don't know if it's his testimony or his speech recently, all 2 hours and 29 minutes of it, probably much more dedicated to that than most people are. You said you had some interesting takeaways from that. Maybe you can explain what you saw there.
Yeah, so the Senate has the banking committee, and that's where Powell was giving a testimony, but the testimony is a very, academic prepared note that he does for like 2-3 minutes, and then the other 2 hours and 25 minutes is basically Q&A session, where senators, one Democrat, one Republican, one Democrat, one Republican is asking questions. So just that alone makes for a very interesting dynamic. Before he even gives his testimony, the committee chairman, who's a Democrat, gives his notes, then a Republican gives his notes, then Powell, and then this whole thing starts. So it started 10 a.m. Eastern, and I'm watching that while I'm watching the price of gold, the 10-year bond, and stocks. So basically my portfolio plus the NASDAQ and the S&P 500 to see how words move trillions of dollars around, which is insane, right? So Powell, a few things. First of all, the atmosphere, the vibe. I haven't seen the Federal Reserve Chairman being grilled and being disrespected and kind of put on the spotlight as much as I've seen in this one since Bernanke's very tough ones, where he had to explain like why they didn't see the real estate market, the subprime lending, the whole thing. I have not seen this sort of you're here to be grilled type environment in many, many years. If you remember during the Trump years, they were almost apologetic. They were like, I know he's putting a lot of pressure on you, but we thank you very much for doing your job under this duress. With Janet Yellen, obviously the first female, they were always commending her for being the first woman in office, etc. And obviously with Bernanke in later years, he was always like very, calm and everything looks very respectful. This was not. This was Biden reconfirmed you. We have to actually still officially reconfirm you, justify to us that you're the right Fed chairman. It was really a different vibe. And the markets immediately saw that this is the vibe. And just as they started giving their notes, the market's starting to drop. A lot from, I think, like 0.2 down for the NASDAQ. It went to almost 1% down. It was a big move. Gold went, everything went down. It was like this is going to be a difficult situation for the Fed. We'll see what he does. Immediately, the market's correct. Powell gave a stellar performance. He was really juggling between this theater of politicians trying to get him to. They were not settling for broad-based in general answers. They were pinning him down. Like, can you assure me? Can you promise me? It was really interesting. Okay. The Democrats wanted him to acknowledge that climate change is a big problem. They literally were, what are you going to do to fix the climate change? Like the Federal Reserve has some immediate impact on that. But they were literally threatening him, Robert, telling them, look, banks are not going to pass stress tests if they keep lending money to oil projects, which are going to, go into zero. The Democrats are trying to show him, hey, if you don't see that, that's the financial impact of what I'm telling you. We are going electric. We are going this. You need to make sure the banks are not lending to, fossil fuels projects and stuff like that, like pie in the sky type stuff. And then they wanted him to promise that there will be Hispanics on the board of governors. They were like, why is there no Hispanics? It was really interesting. And they were not like sugarcoating words. They were like, Hispanics are 22% of the population. There should be Hispanics on the governor's board. Why is there no diversity? So that's the Democrats. And obviously they were furious about Clarida's insider trading. They were like, this is unacceptable, et cetera, et cetera. We as elected officials have to show example and whatnot. So this is the Democrats. This is what was important to them. Diversity, climate change, insider trading, you need to represent. And obviously inflation. They were like, my constituents are suffering, oil prices, the pump, and food prices. Republicans, on the other hand, were also complaining about inflation. So this was the common ground. They were telling him that he was being too accommodative, too easy for too long. Like, saying, look, this healthcare crisis was done a year ago. You should have tapered sooner, tightened sooner, the whole thing. They wanted him to assure them that he's not going to be political, that he's not going to succumb to political agendas like climate change and diversity, that he has a dual mandates, which is, jobs and like maximum employment and price stability, and that's what he should do. One of these Republicans almost cried. He was like giving them, this goes back to the Tea Party. You have to do, it was like a very emotional speech. And at one point, one of them even told him, like, look at the chart behind me. It was like an exponential chart of the national debt. And he said, you don't have to be a Euclid, like the inventor of mathematics or something, to see that this is unsustainable. And Powell had to acknowledge that. It was really a grill down from both sides.
So I have real quick comment on that. So a lot of it seems like kabuki theater to me, because
for sure.
Obviously the central banker isn't the one that spends the money. It's Congress that spends the money. So let's just point that out. Yeah, the congressman drilling the central banker for why Congress, his compatriots and his predecessors are spending all the money.
That's right.
You're not supposed to politicize the central bank, but it does show that everybody tries to politicize the central bank.
Absolutely.
To serve their purposes. Spend money on my project, right?
Yes. And also, Robert, if you think about it, Biden basically told him, look, you either just publicly acknowledge that we have an inflationary problem so that America knows you're doing something about it, or I won't reconfirm you. And I'm also putting like a deputy vice chair that I'm going to elect, so that I see that you're doing my bid. So obviously we know it's political. Secondly, regarding what you're saying, he was very diplomatically and politely putting it back to Congress that there are things that he can't do, that they need to do, without telling them that they need to do it. But he was telling them, look, I can control this and this and this. But if the ports are closed, I can't do anything about it. This is a political regulation that you have to take care of. You have to sort these things out. And as he was saying that and trying to not offend and alienate each side and being very political on each side, at the same time, he was not trying to sugarcoat anything or anyone. He told them that, and obviously he knows that he's really talking to Wall Street. He told the world that this is going to be a very a period where we either do pain now or pain later. Do you want like necessary pain now and discipline now, or do you want vulgar pain later? So he said, look, a lot of people don't get back to the workforce because they don't trust us. They don't trust the government. They don't trust the elected. We need to show them they can trust us, and trust means lowering this 40-year high inflation. So the first thing we need to do is get inflation under control. Then the American people, will trust that we have things under control, and then people will want to go back to work because they will see that this is a real recovery, a real expansion, and whatever. Before we get inflation under control, of course, a lot of people won't get back to work because they don't trust what's happening right now. So that was a big point for him, that we need to control this now before, this is a key theme, before the mindset of inflation becomes entrenched. He was really being smart to tell Congress, it's not just the numbers. The numbers are high, but if we keep telling them that it's transitory and they keep believing us, then they won't operate the American people. It won't become a self-fulfilling prophecy. And as you know, inflation is a mental phenomenon. When the people think that inflation is here to stay, they spend differently, they save differently. So he was really stressing the point that this is a psychological game, and we're losing it. We need to get this under control. And we need to show a victory. We need to show that we've won.
Lior, did he take responsibility for all the money printing that's leading to the inflation? I wonder. he and his predecessors, Yellen and Greenspan and all those guys.
Yes, he did, but he explained it in a manner that's very similar to what Warren Buffett explained it. And he said, look, if I came to you 40 years ago and told you that interest rates would be zero for borrowing money for Washington, and the national debt would be 29 trillion, and we would be the world's largest economy, and we would have the highest GDP in the world, etc. You would think I'm a lunatic, but here we are, and the world wants more of our debt. So he was saying, look, it's unsustainable. And he was telling the congressman who asked him, he told him, look, when tax revenue is strong like it is right now, you guys need to figure this out. You need to figure out how to close down debt. But he was also talking about being trapped. He didn't obviously use those words to not panic anyone, but he said, look, if we don't raise rates, the next slowdown, we have very little to do. We won't be able to lower rates. So he was also trying to stress that we either have the pain now or later. My point is that he gave markets all the reasons to stay in cash and on the sidelines. He literally told them this is going to be, we're going to do a lot of tightening, and we're going to start now. It's going to be aggressive. We need to do it. And if we don't do it, we have, we can get into a 1970s scenario. He didn't say those words, but that's what he was implying. And it was big because at the same time as he's saying all that, the markets are starting to rally. And so it gives you an idea that a lot was already priced in, that the markets, that the Fed was behind the curve by at least 3 or 4 months. So where I think we are right now, and by the way, Robert, I put a much like a comprehensive, very easy and fun way to read and kind of summarize all this at wealthresearchgroup.com/, 2022, the numbers 2022, which is a full economic outlook. I published it even a few days before this, and it literally is playing out in the same. So very good read, and it's a free download report. Now, what I think is happening is that the markets have priced in 4 interest rate hikes, which means March, June, September, and December. So half of the meetings this year, we're going to see a rate hike according to the market. And not only that, but I think that what's happening is that there was a huge bubble in stocks just a year ago. I think it peaked with the silver squeeze on Reddit and the GameStop scenario with Robinhood and the SEC getting involved and everything like that. So from that time onwards, from about the 16th of February 2021 until now, so 11 months, we've seen the NASDAQ companies. There are 3,000 stocks listed on the NASDAQ. Over 40% of them, which is 1,200 stocks, have fallen by 50% or more. Okay. Secondly, about 65% of NASDAQ stocks, so this is about 1,900 companies with an overlap on the 1,200 I spoke about just in the previous sentence, are at a bear market. So they've fallen from their highs at least 20%. We have seen such scenarios only in the dot-com bubble bursting and in 2008 and in the March panic, the March 2020 panic. We have already popped the growth bubble. I think we've already popped a lot of the other retail bubbles that we've had. And right now, I think the markets are like a warrior who got hit hard a few times, and he doesn't feel as confident as before that he can win the fight. He doesn't want to get up this quickly. He's taken too much blows. So we are not in a classic buy the dip situation. But I think the markets right now are in a situation where there are very attractive companies, but there's no real rush of buyers. So we are due to see a very flat to market for a while here, and it's not healthy. And what we saw last year is not healthy. So both things are not healthy. Last year we saw euphoria. This year we're seeing hysteria, and I think we're going to reach a better plateau and a more equilibrium around the second half of the year when the midterms come and there's more certainty about who's going to win the midterms, which will indicate who will win the next elections. So a bit more certainty will come. What has held up the markets for a lot of people that are watching this and are saying to themselves, well, how could this be? The NASDAQ is like 2 or 3% off the all-time highs. We've had 77 all-time highs in 2021. How is this even possible? It was the best year for the NASDAQ 100 since 1995. How can half of the index, how can half of NASDAQ listed companies be down over 50%? The reason is that the NASDAQ 100, which is the index that people watch, represents just 100 of the 3,000 companies on the NASDAQ. And secondly, 55% of it is comprised of the weight of the top 5 components, which is NVIDIA, Microsoft, Google, etc. So what you see is basically a situation where the index is expensive, or the index is priced at an all-time high, but within it, there are amazing opportunities. This is a year for stock pickers. This is not a year for the index. The NASDAQ index has done very well for 3 or 4 years in a row. Historically, when 3 years back to back, like we're seeing right now, it has appreciated by over 10%, so a double-digit return. The 4th year, is half and half. It's historically it can go up or down. So we're not in a good situation to just buy the index and see what happens. It's a phenomenal year for stock pickers. So just to give you that idea of how things are looking if you pull the hood. Secondly, tech stocks have corrected or crashed for the same reasons that gold and silver have. Higher rates, tightening, tapering, etc. Obviously, a situation where the markets was pricing in higher real interest rates. The difference between what I think is happening with tech stocks and what I think will happen with gold and silver is this. The tech companies, not the Big 10, but the rest of it, I think those are out of favor and will remain out of favor for a few months longer. I don't think people are rushing to go back into them. They're starting to do their due diligence. Hedge funds are doing their due diligence. They're seeing, even now, after a 50% decline, these are not real bargains. This is not like 50% down from fair value. This is 50% down from way overvalued. So if a company is like 4 times overvalued and it drops by 50%, it's still overvalued. So the markets are seeing that, and they're just slowly trying to pick and choose what they want to own. With gold, the situation is very clear. It has priced in 4 interest rate hikes. And as we know, once the Fed starts raising rates, if they raise 4 times, the Fed's fund rate will reach 1%, which is nothing. It will still be real yields will still be negative even after they raise rates. So for gold, if you're a Wall Street fund manager, you look at the hedge, what you're doing right now, which is trying to buy tech cheap and still make money this year, and tech will be very sluggish, you're hedging with the one asset class that has risen 100% of the time in Fed rate hikes. The Fed has raised rates 6 times, 6 rate hike eras since 1971. Each and every time, gold has risen 100% of the time. The average gain has been 30%. So if you have that historical backtesting data, and you know that in 2 months from when we're doing this interview, on the 15th of March, the Fed is going to raise rates, and man, I have a 30% historical data that I can make with gold. Gold is a perfect anti-correlated asset class to stocks. Stocks are going to be suffering this year. I think we have a very good year for gold. I think we have a chance for an all-time high for gold even this year. And so I am very bullish on gold, extremely bullish on gold, actually. I can tell you I have not been this bullish on gold since September 2018, when gold dropped to below 1,200 and I made my last purchase of gold ounces. So I'm extremely bullish for this year, and I can talk more about like rate hikes and stuff like that, but I think the scenario here is very clear. Gold's path is very clear. Tech's path is unclear. It's really easy to see how Wall Street funds will hedge, and you're already seeing this decoupling. The NASDAQ is wobbling around and going down in the first 11 trading days here. Gold is actually going up.
Yeah, so gold's back in the $1,800 range, not near its all-time high, but at least it's risen. It was in the doldrums most of the year. So when do you think gold, and do you feel the same way about silver, and do you feel, when will gold and silver move, do you think? Is it going to take the first rate hike, the second rate hike before they start to move?
I think they've already started to move, but I think that the real move for gold will be around the March rate hike. So by the time they raise rates in March, if they do it 100%, so if they announce a rate hike in March, I think gold goes right past 1900 on that on the following trading days. For silver, here's two things to watch. One, the $25 an ounce, which is a very important algorithm range. A lot of algorithms come in at 25. Secondly, the 29.5 range. So that's where the real resistance is. And then the DXY index. So watch the DXY. If the DXY starts going towards 90, and it's right now around 95 and change. If it goes to 90, coupled with what I said, I think the situation for silver is one of the highest reward, lowest risk that I've seen for silver in many years. And let me say that again. There's a range that silver trades at between 22 and 29.5. That's a $7.5 range. That's the support, that's resistance. It's already tried to test the support a few times, and it's all the time it's risen. So it has a very strong support at 22. Then on the flip side, it has a very strong resistance at 29.5. You saw when Wall Street Bets tried to squeeze silver, it could not go past that 29.5 range. So very strong resistance there. The DXY, which is the dollar index, that's what's holding silver down, because a strong dollar correlates with a weak silver price historically. Way more than dollar weakness impacts gold, it impacts silver much more. Okay, so if silver was to go to 29.5, the size of the breakout is the size of the range with an 85% certainty on technical analysis. So from 29.5, you're going to 37. That's a $7.5 move, but its likelihood of happening is 85%. My opinion is there's no need to speculate on whether or not this will happen and take the chance that it won't. I would rather see it happen, and then I know, okay, I have a $7.5 move with an 85% certainty. I can do a leverage bet on silver instead of just enjoying that $7.5 move, which comes every few years where silver does such a strong, high conviction move. I can do options. I can do mining, like silver stocks. I can do the leverage ETFs. I can take on more risk because it's an 85% certainty, and I will do it as a trade. So that's my position on silver. I like gold way more than I like silver over the long term, because gold has just proven itself to be a much better asset class in the past 51 years. It's compounded at 6.9%, whereas silver is compounded at 3.4%. So there's no comparison between the two. Gold is far superior over the long term. But if you can catch these moves for silver, they're obviously way more explosive. So I think silver is much more of a trade for me, and gold is much more of a long-term hold for me. So that's where I think these things play out. So watch the DXY, watch the 25 an ounce, and obviously watch 29.5. I will be actually covering all of it in detail on our free newsletter. We will cover this situation, follow the gold-silver ratio, just like you do on your channel, on our newsletter, because I think this could be one of the best times, 2022, for gold and silver. Remember 2016, this is very similar.
So how can people find out more? You mentioned that you're going to cover it. How do people get into your newsletter?
The newsletter, 𝙂𝙊𝙇𝙀𝙍.com. Just on the homepage, you put in your email, and you become instantly subscribed to the newsletter. I'll also tell you that on the top tab, on the top menu, there's tabs. One of them is called Watch List. Another one, Special Reports. The watch list is actually a watch list of my portfolio, where you can download like all the stocks that I own. If you go to 𝙂𝙊𝙇𝙀.com/price, you can actually see all the limit orders that I currently have on stocks. Here's
the watch list here.
Yes. So those are all the reports that we put together over the past year and a half. If you remove that pop-up. Yep. So that's the limit orders. A lot of things that I do now to kind of make sure that people know what I'm doing and how I look at the markets, etc. So that's pretty awesome. And watch the other one, special reports, is basically a glossary of download files on many different topics that we cover in the newsletter, and we just package them as PDF so people can, if they want to, over the weekend, go over some information on gold, silver, on just the economy in general. I think that those are great with a cup of coffee or tea or whatever you want to chill and read.
Okay, thank you so much, Lior, for dropping by the channel. We appreciate your coverage of Powell and what he said, and also your views on gold, silver, and the rest of the market. We will have you back on here again.
Thank you, Robert.
Hey, everybody, this is Robert. Thank you so much for watching that video content. I have a couple of quick announcements I'd like to share with you as we head out of this video. First, I want you to know that on January 26, 2022, we're going to have our inaugural 2022 Metals Kickoff Conference. It'll be the first virtual conference of the year. We'll have many to follow. You can register for it by clicking on the link in the video description below, and which will take you to this page, and you can click to register for that event. We'll have many great speakers there that you guys love. 𝙁𝙊𝙇𝘍 from Crescat Capital, James Anderson from SD Bullion, John Fennick, Fennick Consulting, Dave Kranzler, Investment Research Dynamics, Andy Schechtman from Miles Franklin, Ian Everard from 𝙂𝙊𝙇, and more will be joining us, as well as a slew of companies if you're interested in investing. Also wanted to remind you, you can find us on 𝙂𝙊𝙇𝙀𝙍. We have a free newsletter. If you click here and enter your email address, we'll send that out every Monday to you, as well as we have special precious metals deals with leading bullion dealers here in the United States. If you click that button, you can go here and click on either Miles Franklin or 𝙂𝙊𝙇 and get the best deals in the business. Once again, thank you guys so much for joining us on the channel. Until next time, this has been Gold Silver Pros.